Good evening and welcome to the nightly edition. I am Russel Liss, show where we talk about stock markets, anything related to day trading, things of that nature. Uh, Today we're going to talk about the stock market, what exactly happened. We had the Dow closing up over 5.59%. Sorry to read this. We have the S&P closing 0.6% flat, basically, and the NASDAQ a down whopping 1.33%. Okay. We have mixed markets going on, and there's a lot happening, a lot moving around. And this is really where, if you've paid attention much to the news, where they talked about a lot of the volatility and last year, pretty much if one was up, they were all up, and now we're getting already into this year, and we've got a lot of divergence, which gives us really a lot to talk about, as to kind of figuring out what's happening, why this is happening, and then really looking at which way we think our trades are going to go and what direction we're really going to pick. We're going to find that path of least resistance. Okay. So, okay. Now, the reason the Dow Jones is going up is you're getting a move, again, this thing we talk about with rebalancing. You're getting a move into financial stocks, things like bank stocks. This is part of the rebalancing process. And also, it's not a bad bet, because a lot of the banks are, they're still in, as of right now, they're still doing stock buyback programs. So they're shoring up basically their own price of their own stock. And so they have this legal ability to do this at this point, to buy back their own stocks. However, where we're really sitting with the other two has a lot more to do with what's going on. In some of it is rebalancing, selling off things that were very profitable last year, things in the S&P 500, things in the Dow Jones, or things in the NASDAQ. And at the same time, there's some profit taking there, but at the same time, there's some real confusion going on as to what's actually happening in the bond market. Now, before I go forward, I have to give a big shout out to a guy named Steve Van Meter. I've been following this guy on YouTube for a very long time, and Steve is very intelligent, and everything I have really been learning, I've been learning a lot pretty much from him. And you should definitely go over and check out his channel. I don't know Steve. He commented on one of my tweets one time. That was really exciting. But for the most part, he's just good, really good financial analyst, and very good as far as like teaching you how this whole system works. Okay. So what we're going to talk about today is we're going to talk about the bond market a little bit before we get into the charts. All right. The very first thing you have to understand about the bond market is you have to understand how the bond market works, or what a bond is. Again, I'm not a big teacher. I'm really trying not to teach a lot on this channel. It's more about kind of opening the conversation. But this is probably one of those things I didn't know about it, so you probably need some help. So you ask yourself, what is a bond then, or what is the bond market? Well, basically, if a government or a company wants to raise money, one of the things they can do is sell a bond. Okay. So this bond comes with when you sell a bond, it comes with an interest fee, right? Or interest payment. So if you buy a bond for $100, that bond could pay you, any percentage of interest. Hypothetically, let's say 10% interest over the next, say 3 to 5 years. Okay. Well, we'll pick 5 years just for easy figuring. Okay. So your $100 bond is going to pay you 10% interest for 5 years. So your $100 over 5 years will make you $50. 50% in 5 years is okay. Not too bad. 10%, it's right on there with the S&P 500. Really not want to talk about the quality of this hypothetical situation, more or less what it means. Okay, here's the deal with that. You buy that bond for $100, paying 10%. But if tomorrow, but tomorrow happens, right? And tomorrow you can buy a bond for, say, 15% interest, or 20%. We'll just say 20% interest, right? So your bond then for tomorrow, put in $100, and over the next 5 years, you'll get another $100 back. Okay, So that's twice as much. Great. Now, here's where it gets a little bit tricky. In the event that person who bought the bond for 10%, that pays 10% interest, needs to sell the bond, okay? Because we have the second bond with the 20% interest payment, right? This first bond for 10% interest is now worth less money, okay? Because nobody will buy that bond when they can just buy a bond that pays 20% interest already, okay? Again, completely hypothetical numbers. These are not the exact interest rates of the bond market, okay? So getting into that, last 2 years, we've had the lowest interest rates ever, okay? The Fed wants to raise those interest rates, all right? They want to raise those interest rates middle of March sometime, April, somewhere in there, all right? All of those bonds that were worth whatever they're worth now are going to be, as of it, but they're going to be worth less money, okay? All right, now hold on to that because there's more information here, okay? And you might have to come back and watch this part a couple of times because it took me a while to put this together. All right. As I said in the beginning of the explanation about this, they sell bonds in order to get money to a company or to a government. When you buy a bond, you're giving your money to a company or a government. The Fed for the last 2 years has been buying bonds. And what they're doing with those bonds is they're buying the bond, they're giving the government and companies money, they're giving these money. So those companies and the government have money. But now the Fed today said they want to sell the bonds that they bought, okay? Which means if them buying the bonds and putting money into the economy, them selling the bonds then will mean that they're taking money out of the economy, okay? So what we're going to see is not just interest rates and borrowing fees get higher, okay? We're also going to see less money in the market, which means you can't be as wild and crazy. You have to get a better return on money you borrow in order for it to be of any value. Now, in the stock market, where that matters is on something called margin. Margin is money that you can borrow, right? If you put in $100, they can give you an extra $400, okay, to buy stocks with. So now you have leverage or margin that is up to $500 to buy stock with, all right? So all of that margin is going to go away because all of that money is going to go away, all right? So because those interest rates are going up, and also because that money will be coming out of the market, okay? Now, the reason they're doing this is because they believe that fiscal policy, them having an easy money policy, the Fed printing money, which is not true, but that's the narrative, that the Fed prints money, has caused the inflation rate, okay? So they think as if, well, if we pull that money off the market, there'll be less money, it'll have to come down. All right. Now, I don't know whether it is or it isn't. That's the narrative. That's as far as I've been able to research. So things that were like risky, like technology companies, and things that are entirely unproven, like small cap stocks, small cap companies, whether or not they're going to be able to continue to deliver at the rates there's not going to be extra margin or extra money to go into those companies and drive those stocks higher. So what we should be seeing is some sort of actual pullback coming in over the next 3 months. in some of these areas. So really just because the capital won't be there. Now, this does not mean that we're going to crash the market. Okay. I do not believe that the stock market is going to crash. Okay. Possible recession. Yes. If you call that a crash, great. Okay. Whatever. But I don't think it's going to crash. Okay. And the reason is because at the end of the day, we still have 300 million people here. We still have companies, the biggest tech companies in the world, the most powerful, richest companies in the world are still in America, and even if it does, it will be very short-lived because there is a lot of cash sitting on the sidelines needing a reason to buy the dip. I'm not joking with you. The number of people who are waiting for this next crash to happen so that they can either go buy up houses or buy up stocks is just immense. All right. So I don't think we're going to have a crash, possibly a recession. However, going into tomorrow and the next few days, I'm definitely going to be a lot more bear biased, and I'm going to be a lot more pushing more towards puts than towards calls. Now, that doesn't mean that I will only buy puts, but as of right now, my mindset is really switching into, it's probably going to not just be risk off, it's going to be there's no capital. So to the downside, I believe we're going. All right. So let me make sure I hit all of the stuff. Okay. So let's go ahead and jump over into the charts then, and let's get our trade sort of planned for tomorrow. All right. So let's go first. Let's start with SPY. This is our boy. Again, you can see that we had all of this buying throughout the week. This is the daily chart for today. You can see right here, this red candle, we still stayed above this line right here. A little bit of a wick down, but still pushed up over the top of it, held up over there for SPY. Again, closing, like $1 down, not very much. All right. So what I'm going to say is there's a pretty good chance we can still see a break above this, breakout above this. Today, we did see us get into the right up against 480 before a lot of the big selling off happened. So that was not too bad. Not great. Gapping down in the pre-market. And there, you can see right here where we got to 480. We get the pull back. We get this peak over here. And this is a big reason why I think this is going to continue to go down. This peak over here, okay, is not as high as this, right? Where we started at, we didn't get anywhere near that 480 again for the rest of the day. That would make me think, and then I have this resistance support line right here. Again, we got over it, but we didn't stay over it. Like if this little bit of support had happened up here, it'd be a different story, but it didn't. So as far as trading goes, this is probably headed to the downward direction. Again, I'm looking for reasons for it to move up. I'm not sure that it won't. Again, you can even look over here on the left. You can see everything I got is red. Okay, just red. Okay, one of the things that we're working with these days is called the VIX. Okay, we're looking at the VIX, and this is from the Chicago Business Exchange. This is just something that pretty much it's not a stock. It just measures volatility in the market. Now, anything below 18 is essentially bullish. Anything above 18 is basically bearish, is where we're looking at. When you see this number, you're looking kind of in that range. All right. We are still technically bullish, but if you look at some of the moves from today, again, you can see the big move up there, trying to climb up, coming in. I don't think this doesn't do the after hours and pre-market. So we got this climb pretty much all day, I believe, all the way up, because I remember we pulled all the way up and we get this big push up. So we're definitely heading into bear territory. The 50 is close to the 9 on the 1 minute. And there's a pretty good chance, they're going to pull this thing around. So tomorrow when this opens up, the one thing I'll tell you about these averages is it's going to pull right in here. And that candle will be just automatically right on top of the 6 EMA. This is a 6-day EMA. And from there, it can push up very easily to how these work. Now, again, not exactly the same as day trading, but okay. So SPY, QQQ obviously just continues to take its usual bludgeoning. We're down here. We've tagged, right? And again, this is something we talked about yesterday. I told you yesterday. I said, we got up here on this green candle yesterday, this red candle right here. I said, this is coming. Look for a sell-off because if this candle had gotten up here, if it had gotten back up here, yeah, you would have looked to see a breakout. But right here looks like it's a failed breakout. It's a breakout that didn't even get enough steam. You get the pullback to the 50 right here. We have support could be resistance could be support to the downside. So there is a chance we will get sucked up over this for a little while tomorrow. But again, I think we're coming down to touch that 50 EMA. This is on QQQ. We're probably going to make a beeline for that. And the big reason that makes me think that is this line. There's this little line right here, and it is touching the 15-day EMA. Okay. There's a pretty good chance that if that drops below that, this is the 6-day EMA coming below the 15 EMA. And when that crosses down, that is a bearish signal, and you will get a lot of just algorithms that will sell that just to push it down, or just to either short it or to cut their stop losses. Okay. So there's a pretty good chance we are headed to the downside. Now, the one thing I can say about it is price got down here pretty low today, 393 on the daily. We could, so we got some buying pressure pushing it back up over the 15. But that I'm not overly optimistic about it. QQQ is definitely tech heavy. Again, we can go look at Tesla. Tesla's not doing too bad. This is not something I would not expect to see. Gap up here, come down, pull back into this. Would expect to see Tesla come in strong tomorrow, green to the top side as it pushes against this and sets up for the breakout. The one other thing that Tesla could easily do is pull back down here to it could easily fall to the pullback could be as bad as coming down to the 6 or the 9 to the 9 or the 15 to the 9 or the 15 and then continuing its breakout. So I'm pretty much expecting to see either one of those two moves. I don't trade Tesla a whole lot. I don't like the stock. Like I don't like Elon's great and all, but I'm not a big fan of the stock. And the company, I'm sure they'll do great things, but I've just never gotten into them. Apple, again, you can see the same thing. You can see Apple right now looks like a topping pattern, to be honest with you, if I had to say anything about Apple, because this red candle, it got above here and then came below. It's outside of that. So I would be somewhat bearish on Apple if I was going to trade it tomorrow. And tomorrow will be a good day to experiment with things because options will be cheap, the daily options. So again, I'm pretty bearish on most of this stuff. That's not to say that they're, both of these, Apple and Tesla, have diehard fans. And the one thing to watch out for tomorrow is that the fans come in and just buy the dip and just go bananas buying the dip on these two companies. Apple is definitely going to be worth its $3 trillion valuation when their electric car comes out, especially if it's as close to self-driving as they claim. But again, none of this is recommendations as to what to buy. All right. So this is kind of our setup for tomorrow, going into tomorrow. See anybody in the comments say anything? All right. So I think that's it for the charts today, guys. Again, looking at those, really, really thinking about puts a lot and taking up a short position as far as and really again, just watching where the big money's going. I can't express this enough. We're always watching the big money. They run around in ocean liners and we are on jet skis with our, our tiny little accounts. So I really hope to God, and some of you all aren't even on jet skis. Some of you are on like one of those paddle boats. Some days I feel like that's me out there trying to get. Now, one other thing that I'd like to sort of ask about is, let me know if you guys are really interested in seeing how my trades go. I would be willing to show off some of them. They are not glamorous. I am not $1 million trader. I work very hard at what I do, but I'm still, I'm in my second year and developing, just about to cross over into my third year. So developing as a trader still. This channel pretty much exists for the purpose of creating conversation around this and introducing new people to the stock market and different sorts of things. So what am I trading tomorrow? I'm going to read some of the comments. So tomorrow I'm pretty much stick to IWM and SPY and QQQ. QQQ will probably be a pretty easy short tomorrow. So that's definitely what I'm thinking. The Russell 2K could go either way. I'm going to go back up there really quick and look. IWM, I would say based on the 1 minute, IWM's probably headed lower, especially because the 50 just crossed below the 200. So I probably trade some on IWM. It'll depend on where those option premiums are also like affordable. Tomorrow's Wednesday, so up until 11 o'clock in the morning on Webull, you can buy those. Up until 11 in the morning, you can buy those contracts for pretty cheap. So I've been getting them for between 30 and 50 cents, and I've been getting some good yields on that. So I've closed a couple lately over 100%. I'm not buying more than 4 contracts at a time right now. So because again, I'm not super confident in any one move due to the volatility. So am I doing calls or puts? I would do both. I'm not biased towards which one's better than the other. I like puts better. The put setups are like way easier than call setups. Like when you see a stock dangling below when you see those candles dangle below the 9 EMA, that's the easiest way to see a print. The breakouts are so psychological to the upside. It's harder for me with the call side. I've made money on calls. I've definitely made more money on puts. So anyway, so if you guys, like I said, I'm going to call it quits right there. If you guys are interested though, I would be happy to share some of my trades with you. I'd also be happy to do some live streaming of my trading. Again, not super exciting stuff, but if you're interested in kind of seeing my process and how I work and maybe exchanging some ideas on that, I would definitely be interested in working together with some of you guys. And so, anyway, so we did that. All right. Well, guys, I hope you guys have a good evening for the Russell Journal and Nightly Edition. I am Russell, and I just like to remind you all to respect your risk.